All right, guys and gals, back to work, boy. A wild last couple days. How about those buyers pulling out a small miracle and defending against that bearish reversal we talked about in last night's video? Now we have this huge move going higher today. You know, everybody's waiting for a pullback to get in right now. Now, pullbacks, they sound so easy in theory, don't they? Just buy the pullback. But we all know that picking the perfect pullback is certainly not as easy as it sounds. The good news is, though, anytime we see a big move in the afternoon, like we saw this afternoon, there's always two types of pullback trades I look for the following day. I'm going to cover my two favorite pullback entries. That way you can time the perfect pullback entry. We can all make some money on Wednesday morning as well. So charts ready to go here. Glad to have you back here once again on this video. Enough of the intro. Let's go make some money on Wednesday morning. Boy, charts look fantastic here tonight. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two very important clues on these charts in front of me that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on the 60-minute, these hourly time frames we talked about last night. We've been bullish overall for a while now. Ever since the middle of September, we had that strong run down into that trading range. We talked about how the bears had a golden opportunity to bury these bulls and rotate lower. But what happened? The buyers held their ground. Some might say a small miracle, right? Holding off those bears, and the buyers maintain their overall direction. Remember, these hourly charts are really effective at giving us the best overall direction in the market, acts as a filter for us on our faster time frames. So one very big clue for tomorrow is the buyers are still in control, certainly no reversal that we talked about in last night's video. Now, that's only one important clue. I have one even more important clue to help us time the entries on some faster time frames. Before we talk entries though, let's talk schedule for tomorrow. A lot of folks have asked me, tomorrow afternoon, we've got those FOMC minutes at 2 o'clock. That's pretty much the only major news we have on the radar for tomorrow. But remember, we already know the Fed has told us repeatedly, every single one of these Fed speakers has said repeatedly, they're waiting for more data to know what the rate cuts will look like in November and December. I don't think those FOMC minutes are going to say anything that surprises any serious trader tomorrow afternoon. Everybody's waiting on that CPI report. That is the data point that all the Fed speakers are waiting on right now. So we might get a little bit of fireworks around the FOMC tomorrow afternoon, but I don't expect that to be a major market mover. Everyone's eyes are still focused on that CPI report. Then we can worry about what the Fed speakers say for November and December FOMC minutes. So it's on my radar for tomorrow, the FOMC tomorrow afternoon. But again, I don't believe that is the big catalyst of the week. I think the CPI on Thursday is what everyone is waiting for. So let's get back to our charts though. It's good to know when the news is 2 o'clock tomorrow afternoon, but the money is made on the charts right now. I talked about earlier, bullish overall, buyers defending with that small miracle, defending those bears. Now, I got one more important clue here on some tick charts. We don't use time charts to find entries. Tick charts make entry timing so much easier because tick charts are based on volume. All the time frames you'll need, by the way, upper left-hand corner of this video. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It is pretty much the only indicator we need to find winning trades each week. There is one very big clue on this chart, and that is a big move going higher, a huge reversal off of that low. Now, remember earlier, I said earlier, anytime we see a big move like this, there are always two types of trades I look for the following day. Let's cover the most common one first, and then later on in the video on the Nasdaq, we'll talk about the second scenario. In all reality, the second trade on the Nasdaq is oftentimes more lucrative. We'll talk about that more as we go deeper. Let's talk about that first of two scenarios for tomorrow. There's actually three trades to look for as part of that first setup. Now, first things first, when we get a big move like this, I don't want to buy high. I want to buy low. And whenever I want to buy low, I always look for what's called a two-legged pullback. Now think about a measured move that goes a bit too far, right? A measured move goes a bit too far. I would love to get down around channel lows, pendulum lows. I'd love to get down to some support levels underneath. That will allow me to buy low. Now, the great part about a two-legged pullback is that this will feel very bearish as it pulls back. My favorite way to time the entries on these is to wait for the pullback to that 21 EMA and let sellers try twice to keep us going lower. Once those bears try twice, see, now I've got your stops locked in. Only way out of a short trade is to buy your way out, trapping in some sellers with what I call a failure pattern and squeezing those stops to run back up to retest that high. Now, an add-on trade. If you want to make more money, add to your winners. And the way I do that is as we run higher, I'm going to watch and see if we get some separation off the moving average. Separation off the moving average, a shallow pullback, a higher high in price, and that sets up for what is called a trap setup. So again, you want to make more money, don't trade more often, add to your winners. We'll grab that failure pattern after that two-legged pullback, a bit more than a measured move, trap those inexperienced bears in, squeeze their stops. We'll take our 1-to-1 first target, look to add on to that position with that trap pattern. Higher high in price, move right below that low. Lots of examples of those inside our free video classes. Now, let's talk about one variation of this. I want to get that deep pullback and trap in those bears right here. But you know what happens? A lot of times what happens is we'll get that two-legged pullback, it'll overextend and then snap right back up again because there's so many buyers who want to buy down here. These can be tricky if you're not mentally prepared for this. What'll happen is if it V bottoms off that low, it almost always begins to grind going higher. You want to learn how to trade these grinders. It's very simple. We don't want to chase after the price going higher. I want to buy as low as I can. And to do that, I'll draw a trend line off the highs. I'll bring that trend line down around that low. That will create a bull channel. Now, very important. Look left, find some prior swings, and I want that first test off the low of that channel. There was one right here this afternoon. Got a bunch of emails from you guys making money off this pattern we saw this afternoon, right? It pops up, it grinds. We don't chase after it. We mark off that trend line, anchor off that big low, and it's no surprise that everybody wanted that first test off that low. So a great example of that this afternoon, looking for, again, if we don't get that failure pattern into trap pattern, if it V bottoms off of that low, remember the key is you want that first test off that low. It could be a bear trap, a seller failure pattern, a pullback combination, all the entry patterns I teach inside the free video course. Which reminds me, I got a bunch of emails and comments, you guys, loving that pop and grind channel this afternoon. I know that most of you guys and gals watching, you know these patterns already, you're making money with these, but if you're here for the first time right now, this might be a brand new language, traps and failures and two-legged pullbacks, a brand new strategy. But don't you worry, I teach this entire roadmap. I have tons of examples of traps and failures and a whole lot more covered in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up right there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries and start making more money. Guys, the bottom line, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up, take that free video course. Everyone loves the free video series. It's perfect for anyone who's serious about making money in these markets. And also be aware too, I'm going to put all the important links we talked about tonight in the description of the YouTube video. You'll find the free class links down there. Start first there, learn the roadmap, start making money on your own. And don't forget, we trade together every morning, 8 o'clock Eastern time in our trade room. I'll put trade room information down there for you. And if you're on Twitter X, I post a lot of updates, charts, videos, mindset mindset stuff on Twitter X. If you're on there, give me a follow. Again, all the information you'll need to learn more and hopefully earn more is all located there for you in the description of the YouTube video. So I've talked about how earlier we have two types of trades to look for after I see a big move off the low like this. One of those trades is a two-legged pullback, basically a bear trap, and a squeeze back up to retest the high. I also talked about a variation of that V bottom that we saw right here this afternoon. Okay, now there's one more variation of this. I'm going to talk about that second scenario. It's oftentimes more lucrative. Let's talk about that one now on the Nasdaq. Now, before we talk Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing the video link with other trading buddies. That small action takes barely any time for you, but makes a big impact on this channel because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days. I appreciate you guys carving out a few minutes every evening here on these YouTube videos. So thank you so much for the likes, subscribes, all the support. Now, let's talk Nasdaq. Nasdaq 60-minute time frame overall, still very bullish here. Again, bears had a golden opportunity to bury these buyers with a pendulum swing off the high. It seems like now, though, all that was nothing more than a big breakout pullback, and these buyers are undoubtedly now trying to go back up and retest those all-time highs. Clue number one, we're still very bullish here after a miracle, pulling off a miracle, holding back those bears. Now over to our tick charts. This is a 4,000 tick chart in the same 21 EMA. And look at the size of this move. Anytime we see a big move like that, there's always two types of trades I look for the following day. Again, everybody wants that pullback right now. I mentioned earlier the two-legged pullback. Remember that? A bit more than a measured move. Then, of course, we don't pick the bottoms on these. We don't pick the bottom on this. It may keep on going. We don't pick bottoms. We wait for price to pull back. We trap those bears in. We use the stops to fuel the move and run back up again. I call this a failure into a trap pattern combination. I mentioned also too that V bottom reversal off of that low, which reminds me too, by the way, one more variation of this. Then we'll talk about that second scenario for tomorrow. One more variation, then we'll move forward here. If we get that run lower, we oftentimes will get this market running higher here, but because that move down is oftentimes so strong, when you get a big move like this, you have to get a deep pullback to attract in more buyers, right? Oftentimes that deep pullback is really, really strong. And so I would say probably maybe 40, 50% of the time, we'll get that winning trade off of that low. We'll get the stop moved up to point of entry. It's a winning trade, but for whatever reason, they hold the underbelly of a range and they run it back down to retest that low. Now remember, a double bottom or a retest like this overall bull market is oftentimes a gift to us buyers. Think about this. Anybody who sells short on that pullback, their profit targets are where? Back at that low. Sellers up here become buyers down here. Now, is this a good place to be selling? We're overall bullish with a big move higher that wants to retest the high. And the sellers, you want to sell right into that low? No, this is the last place you want to be selling. Do it again. This is a chance to double dip another bite at that apple. Trap those bears in. 1, 2. Remember, we don't pick bottoms. I'm not going to waste your time on some indicator, divergence, MACD, snap cross. Those don't work enough, right? They're inconsistent. You probably know that already. What is most consistent that I know is to trap traders on the wrong side of the overall momentum and use their stops to basically squeeze those stops here for that run back up again. Remember, failure pattern first. Trap the bears below that moving average. Then as we go higher, look for that separation off the 21 EMA. Separation equals strength, as we always say. Higher high in price and a trap right below that low. So this is a slight variation of the game that we talked about a few moments ago. It's a 2-try failure. Again, most of these will pop up. You'll get that one-to-one target. You'll learn more about trade management in that free video course. But again, the market now will roll over, take out that low, stop us out of that initial long trade. You don't want to freak out and think it's a reversal now. It's probably not a reversal. Double bottom retests are very common and a very good example or very good opportunity to double your profits or get back in again for what is usually one of the more lucrative trades of the session. So that's a final variation for scenario number one. Now let's talk about the second scenario, and that's a range up here. Whenever we see a big move in one direction, the following day, especially with the CPI report coming later on in the week this week, we may wind up here going sideways in a range. Ranges are my favorite type of market because once you learn how they work, they're very, very consistent, almost predictable the way they're going to work. Two things about ranges. One, they act like magnets, and two, they love to rotate. So once we start seeing that range develop, and of course, I don't know exactly where the range will be right now, but once we see that range begin to develop here, now we know that range is a magnet, right? So ranges love to rotate. They go up, down, back and forth, and we use things like pendulum swings, right? The amount above, the amount below. We use things like expanding triangles, back and forth. A lot of examples of these inside the free video course. I can't teach everything, of course, inside on these YouTube videos. But a range, magnet, and likes to rotate. So if we understand that's how they work, then what I'll do is I'm going to basically go out, find levels of support underneath that trading range, wait for a breakout, and use the exact same technique I mentioned earlier. But one big difference, ranges like to rotate. So as we go lower, that range becomes a magnet. This is where things get more fun, right? Because now I can use that same 1, 2 to trap in the bears, get those bears short, squeeze those stops, use that trap pattern combination, which I will keep on talking about because they work so darn well. Now, at this point, in a regular trend, the target is back to retest the high. But once we have a range involved, now the amount below the range projects above the range. That's why I said earlier, these can be a lot more lucrative because now ranges love to rotate. They're going to rotate off of that low and hopefully take out that pendulum swing on the other side of that trading range. Makes sense? So if we start seeing this thing go sideways, that in my opinion is a better scenario because now we know exactly where the magnet is and we can now find levels of support below the range and we go out and trap the bears in, failure pattern. And again, look for that, in this case, a technical trap pattern, higher high in price, below that low. You'll learn more of that in the free video course. And again, I'll take a piece of the position off at that high, but leave that runner because ranges love to rotate. Now, let's kick this up one more notch, right? Because this is where the real fun begins. If we're bullish into a range after a big move higher like this, oftentimes the market will try to go higher, but because we're so high up already into overhead resistance, this becomes nothing more than a fake out breakout. What happens oftentimes is we'll break out like this and the market will simply fail and run right back down into that range. These are really, really fun because what happens is the amount of that move off the high. Remember, we know how ranges work. They love to rotate. When this thing pulls back to that pendulum swing, it's going to feel very, very bearish. Rookie traders, right? When I was a rookie, I would think this is a full-blown reversal. It's not though. It's simply a rotation in overall bull market. This is a horrible place to be selling because you're selling very low after a big move higher, and a fantastic place to trap in some inexperienced sellers and trap in and rope in those stops. Again, we're not going to pick a bottom on this because it may keep going lower. Stop going all in, picking tops and bottoms. Much easier, not with indicators, but to wait for price to come back, try a couple times, squeeze those stops. Again, I like 2 tries, right? 2 tries, higher high in price, 1 try, 2 try. Why 2? I want stops. Why a higher high in price? Because sellers want to sell high. So as it pulls back, bears try once, it goes higher, bears try, right? Bears try twice. Now I know where your stops are. I can buy into stops, and same idea. Failure into trap combination. And again, keep on working this system over and over again. The amount below the range, the amount above the range, take some profit targets off, at overhead resistance, up overhead, keep on trading that rotation. So if we're kind of lucky tomorrow, if the trading gods are watching down on us tomorrow morning, we'll get that bull trap, right? That buyer or that fake out breakout off the high. It'll kind of slingshot back down again, trapping those bears. These can be some really, really easy winning trades here. And keep in mind too, right? Because oftentimes we'll get those variations too, right? We'll get this range will form. We'll get that run up. It'll slam back down again. We may not get that 1-2 back up, right? It may V bottom off of that low. If it V bottoms off that low, don't chase after it. Find that grinder, find that channel, right? Same variations we mentioned earlier in the video, right? It's just now we're applying it within the rotation of that trading range back and forth, right? It makes sense, right? So V bottom variation, that's fine. If it happens to retest that low, right? Happens all the time, right? Strong run down, it pulls up, retest that low. Remember, a retest of the low is not a major reversal. So do it again. Bears try once, twice. These double bottom retests, again, they trap in so many people because they feel like such a big reversal. And oftentimes all it is one big bear trap off that low. Failure into trap combination. And again, leave those runners, mark the amount below, mark the amount above. Remember, if you want to make more money, don't trade more often, don't trade more frequently. Get better at adding to your positions with trap entries and leaving those runners. And ranges make it really easy to know where to leave the runner because we know the ranges love to rotate with symmetry above and below. Man, I'm getting excited just talking about this stuff right now. That's the game plan, though, for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to start making money in these markets is to learn and trade along every morning, 8 o'clock Eastern time in our trade room. As always, I'll put all the important links you'll need to get started back in the description of the video. Start first with the free video course. Everyone loves the roadmap I teach in the free video series, and hopefully sometime soon I'll see you trading with us in the morning room at 8 o'clock Eastern time. All right, guys, hope you learned a bunch here this evening. Hope you use this knowledge to earn a bunch. In the meantime, be well out there, be nice to each other, and you better be here next time, right? Adios, amigos. Bye for now.